Thank you for joining us at XM.com. This is a weekly outlook. The agenda of the last week of the year is pretty light, but with the holidays coming up, liquidity may be thinner than usual, and therefore we might see some sharp market moves without any real news catalysts driving them. I'm Christina Marujos. With me today is our senior investment analyst, Mario Hadjikyriacos. The Bank of Japan, Mario, surprised markets earlier this week when it adjusted its yield curve control strategy. Now, the summary of opinions is released on Wednesday. Investors are hoping to get some more clues on how the Bank of Japan intends on progressing from here onwards. So what do you think the main takeaway will be, and how could the yen perform?
Hello, Christina. So it's been a huge week for the yen. The Bank of Japan adjusted its yield curve control strategy. Now, what that means is they raised the ceiling on Japanese yields. They allowed Japanese yields to trade higher, and that helped narrow interest rate differentials in the yen's favor. Now, Governor Kuroda downplayed this move, saying, look, this is not really tightening, it's more fine-tuning of policy. We're not really trying to tighten, but the markets didn't see it that way. What the market saw was the first step in a tightening process. And there's good reason behind that. Inflation in Japan has accelerated. The government is ready to roll out a big stimulus package. So investors saw this move as setting the stage for actual rate increases next year. Now, the market right now is pricing in the first rate increase by April. That's when a new Bank of Japan governor will come in. Governor Kuroda's term ends and he will be replaced by someone new in April. So traders are really betting that with the new governor, we are going to start seeing it will usher in a new era, let's say, of policy tightening in Japan, of rate increases. Now, this week, we are going to get a summary of opinions from the last policy meeting. This is similar to the meeting minutes. It has less detail, but it's released much earlier, so the markets tend to look at it. What the most important thing I think that the markets are going to be looking at is, was this really a one-off move, like Governor Kuroda said, or is it the first step in a process? What does the Bank of Japan board think? Now, as for the yen, Christina, I'm starting to see a favorable backdrop for next year. So the yen was the worst performing currency of this year, but I believe we might see a comeback next year. And the reason is most of the elements that pushed the yen lower this year have started to go into reverse. Interest rate differentials have started to narrow again. The Bank of Japan might be raising interest rates next year as every other central bank, as the Fed and the European Central Bank stop their rate increases. That might help to narrow rate differentials again. The drop we saw lately in oil prices is very favorable for Japan. And of course, tourists are allowed to visit the island again, and that might also help fuel demand for the yen. So I'm starting to see a more favorable outlook. I think the next few months will be very exciting because we're going to find out by April, we're going to find out who will replace Kuroda as the new Bank of Japan governor, and also how much wage growth is going to increase when the labor negotiations conclude around the spring. So those are going to be two very crucial variables for the outlook in the yen.
Marios, now let's turn to the data front. We are expecting some data releases from the United States. Could these prove to be important for markets?
Well, I doubt it. So what we're going to get is second-tier data, some regional manufacturing surveys, and some some housing market data. I don't think that they're going to be a game changer for the dollar or stock markets. I think the main story next week is going to be what you touched on at the beginning, the liquidity, or rather the lack of liquidity, because many investors are going to have already closed their books for the year. Many traders are going to be away from their desks. What that means is there's going to be less liquidity in the markets. And when you have less liquidity, you can see very sharp market moves without any real news behind them. Now, if there is any news, the market impact of that could be greater than usual. So I would be looking for a week of, let's say, erratic market moves. But if we do get any sharp moves, those are going to be more noise than signal, right? Because when you get moves on low volume, they are less trustworthy moves. So that's more or less how I would expect next week to play out.
Marios, it was great having you with me today. Thanks so much. This was the Weekly Outlook here at XM.com.